Let's jump right in. The crypto market is going through what you might call a massive MarketOS software update right now. We're talking a total shift from the Wild West into a mature infrastructure-first financial system. Today, we're unpacking this incredible KINGFINITY Insights weekly report from late July 2026. And honestly, the systemic shifts we're seeing are absolutely fascinating.
Listen to this opening thought from KINGFINITY Insights, because it hits the nail on the head. The strongest story was not one candle, one coin, or one headline. It was the control layer underneath the market. So forget daily price action today, guys. We're looking strictly at the foundation.
Think of this as our official release notes for the OS update. We're going to cover 1. The crypto operating system. 2. Tokenization, rights over wrappers. 3. Stablecoins, the new rails. 4. AI needs financial guardrails. 5. The regulated derivatives era. And finally, 6. Memecoin infrastructure heat. Section 1. The crypto operating system, upgrading to the market OS. So Bitcoin is clearly reclaiming its dominance, right? But this time around, it's totally different. It's driven by this new era of institutional market structure. It's a premium, connected operating system now. Powerful, heavily regulated, and backed by deep, systemic ETF inflows rather than just retail hype. What does that actually mean? Well, serious crypto infrastructure is now judged on, let's face it, somewhat boring but incredibly powerful concepts. We're talking reserves, transparent controls, and governance. This market OS prioritizes rights, rails, controls, trust, and resilience over isolated product speculation. It's the plumbing, and the plumbing is getting a major upgrade. Moving to Section 2, Tokenization, rights over wrappers. The conversation is maturing. You can see how aggressively major players are demanding regulated trading infrastructure. Just think about these moves. Uniswap is rolling out permission pools for compliance allow lists. Securitized Capital just went ahead and registered as an SEC investment advisor. Ondo Network is zeroing in on verifiable on-chain settlement. And get this, BNY is planning for 24/7 tokenized U.S. Treasury settlement by 2027. I mean, the heavy hitters have absolutely arrived. Because of all this institutional weight, the whole conversation has shifted. The question isn't, can we tokenize this anymore? Now it's about who actually controls the fundamental rights and settlement of these assets. What does the holder actually own? Who dictates the transfer rights? Where exactly does settlement finality live? How much liquidity is real? We are dealing with legal reality now, folks, not just shiny digital wrappers.
Section 3. Stablecoins, the new rails. Deepening financial distribution.
To really wrap your head around the sheer scale of this operating system, just consider this number. $303 billion. That is the massive amount of systemic capital currently flowing through these new digital stablecoin rails. It's staggering. And because of that scale, the race has completely shifted. It's not about which stablecoin has the biggest market cap anymore. It's about who actually owns the banking, wallet, and merchant rails. We've got Circle expanding in Korea with Kakao and Toss Bank, and they just acquired nearly 1,000 blockchain patents from IBM. That's a massive push into core intellectual property. Meanwhile, you've got Layer 0 and Kita pushing the boundaries to build tokenized commercial bank money. What we're witnessing is traditional price oracles and physical banking structures actively breaking open. They have to break the old molds to integrate these new blockchain-based payment infrastructures. The legacy financial system is quite literally being rewired from the inside out. On to Section 4. AI needs financial guardrails moving into payment workflows. It's so fascinating to see how this actually works in practice, beyond just the buzzwords. Take Coinbase's new X402 standard, for example. It walks you step by step through how automated AI agents will programmatically request and settle payments. From discovering payment docs to creating wallets, receiving funding, paying merchants, and finally settling in USDC. This is a very tangible, real-world look at how machines are going to transact with each other. So the key takeaway here is that AI in Web3 is taking a very serious turn toward permissions, spend limits, and programmable settlement. Because if AI agents are going to transact autonomously out there, they need rigid financial guardrails just as much as they need wallets, right? All right, Section 5, the regulated derivatives era, rewriting the rules. Talk about rewriting the rules. We are seeing a massive pivot away from the old offshore Wild West leverage culture and moving directly toward licensing, clearing, and surveillance. Think about the old era, symbolized by the legendary BitMEX exchange announcing it's shutting down in September 2026. That sits in absolute stark contrast to this new era of onshore regulated perpetual futures and traditional giants like Fanatics jumping into prediction markets. We are witnessing a literal hard reset of the perpetual swap era. The leverage is still there for sure, but the wild, unchecked risk environment is being permanently shut down. It's being entirely replaced by institutional rails.
But let me be super clear about something. Upgrading the OS to these regulated institutional rails does not remove risk from the system. It simply changes where that risk sits. Risk always exists. It's just being relocated to different institutional custodians and clearinghouses. The Market OS update doesn't delete risk, it just manages it much more professionally.
Finally, let's hit Section 6, Memecoin infrastructure heat, signal versus noise.
So the meme market is definitely not dead. It just changed targets. When you look past the noise, the real story is the actual machine, the platforms and infrastructure powering all this launch activity. These engines are driving immense network heat and attention, and they're completely reshaping how ecosystem growth is engineered.
But we need a reality check here. When you look at the data, the tape is incredibly mixed. Platforms like Pump.fun remain the leading infrastructure narrative, driving huge launch volume. But at the same time, the daily price action is red. Overall sentiment is bearish. And that visible liquidity risk? It is still glaringly obvious. It's a super hot engie, but man, it requires a strict warning label for anyone interacting with it.
The real signal we need to watch going forward is whether this massive attention market velocity can actually mature. Can these launchpad machines evolve into durable consumer infrastructure with clear incentives and real user protections? That is the ultimate test for this specific sector of the Market OS. I want to leave you with this provocative question from the KINGFINITY community to chew on as you digest this massive Market OS update. Is the regulated derivatives era actually making crypto safer, or is it simply making it more institutional? It's a fascinating distinction to ponder. Anyway, thank you so much for joining me for this explainer. I really hope it helped you understand the massive infrastructure upgrades happening right now just beneath the market's surface. Catch you next time.